Welcome to TradeTheMBA.com. This is John. This report is for the 25th. Well, and the market did, I wouldn't call it a puke or anything like that. It was just a nice little normalized retreat from some of the excesses that have been taking place. And you can see here, I had marked this positive extreme just so you could see it. I'll move that aside right here, positive extreme. And we haven't quite reached those lows yet. Got pretty close to 80, well, 61 from the 44. Pretty darn close, at least in the pre-market so far. And yesterday's close a little bit more elevated than that, like 62. So you're going to get this back and forth kind of setup. But again, the positive extremes over time tend to get filled. Of course, there are still a few that are even further back here in, January in that, where we go all the way down to below 5,000. So you got to keep that one in mind as, things transition from where there was certainty before, uncertainty reigned. And as I pointed out, once Biden left the race, it threw so many trades upside down, because you're counting on a 6 month down the road kind of event, and now that's been thrown up, and so all of that had to be recycled and recalibrated. And again, when uncertainty comes, it's relatively straightforward. Selling takes place, rotation into cash positions, as well as just not making any aggressive move. Usually is the standard protocol for most, and aggressive traders, of course, take advantage of that because they see weakness and are able to exploit it in either direction. So, from an NQ standpoint, you can see it had filled that positive extreme back here. The further ones, which were just the yellow, would take you all the way into the 1820s. We expect those to get filled as well, particularly if this continues with MBI White leading on daily. That definitely is the case. You're getting into pretty extreme oversold areas, but you just dip below the DOC negative 13.5. So you're at that minus 22 on the DOC from the green standpoint. You could get a little further dip in the DOC red before you have to have that automatic pop back up. And there'll be those looking for that buy the dip kind of construct, but they started that right here. That failed miserably. They'll do it again, and if that fails, then it gets even worse, and that's when the decline starts to exacerbate itself. And of course, you know, uh, your economic readings are exactly bolstering the situation. And from a treasury standpoint, of course, once you start seeing that selling, the move to cash, it's right there, and that increases the yield in this situation significantly. Um, and it's problematic because what is the Fed supposed to be forced to do something because Canada decided to cut their rates? It's sort of like you see this pressure building, but um, can they afford to cut rates? You no longer have the narrative of trying to support Biden. I think they'll probably try and cut the rates simply because they can see the effective slowdown taking place, but you got to have this cooperate, which is oil, and it is. So from that standpoint, if you can get stay below the 80s and move down towards the bottom side of 70, yeah, well then you have a justification because then you're not looking at that push of inflation. So this helps mitigate it. But you've already had a month long of pushing prices. That's going to show up in the readings a little bit later. It's just the time lag of things. From a euro standpoint, of course, it always was a joke that the spikes happen simply because the eurozone's in far worse shape. Though the decline in oil should be an abatement, that should give impetus for them to say, "Oh yeah, the euro is wonderful. Let's jump back into it." We'll see. Of course, you whenever you get these kind of sell-offs, it impacts commodities, gold, as well as even crypto and that they usually have a corresponding one. It's when they don't match is where it becomes really interesting, because in this particular case, you saw small moves from Bitcoin and ETH as well as gold there. Gold a little more exacerbated. ETH was a little bit more extreme. But again, they had positive extremes going back to here. It just is filling those, so pretty much identical to the market, and which I think is healthy action, even though some think it's dramatically shocking. Nothing was pretty dramatic because we've been red paint bar since the 17th, and here we are on the 25th. So boom, we moved there. We had that little brief respite where they tried to bring things back up, and the short signals just kept amplifying, and then we had the breakdown, and obviously the sell program took advantage of that construct and was pretty clean. Right now we're getting similar attempt at the resurgence. This is that extreme move from the DOC. Red here dipping all the way there, you get a little bit of a pushback, but you couldn't even get halfway to the 23%. And so below the 23%, this is going to be a continued negative thing, and what we have to look for here will be continuing back and forth within the 23%, and then a rising shakeout that starts to build, and you'll know that there are buyers trying to fill into it and accumulate, but we're not seeing that at this particular stage. So it's just a warning to be prepared for that situation. It was all pretty clean action. It really didn't require much. And those, I think, are just like the days that we see, things are all super positive. Similar situation on the downside. In this particular case, a lot cleaner. Usually you don't get them that clean. Usually from a downside moves, you get a lot more attempts to buy into it. But I think this was just a complete capitulation because people don't know what to do. They're confused by the situation. Will the Harris nomination, the coronation survive? The rumblings of nobody getting to vote for it. Will there be a rebellion? So these are all added into the equation of it, and that uncertainty is not solvable at this particular stage. And well, you saw it here. Pre-market selling began, and it just continued. As soon as the cash open was there, everybody was running for the hills, and just continued to go all the way through to the end of the day. When we get into what we're seeing post-market, European session, not a lot of confidence. There was some attempted buybacks, but every time they try to make a move, it's being sold off rather quickly, and I would expect that to continue. There's really no basis for stabilization at this particular stage, because what justifies it? I mean, you're going to see nothing wonderful from earnings unless there's some surprise out there that helps restore confidence in it. This is going to be probably the impetus that will, get the Fed to step off the sidelines, and they can justify it by not having it look political and say, okay, yeah, we see legitimate concerns with growth and how things are going. And so, it'll be fun to continue to play it, but I think that the potential for more downside is significant, and that's always been in the cards. It's just been a matter of waiting for it to take place, and we're finally at that point. So still going to be a lot of bounce and moves in between, because again, with this political uncertainty, it just throws so many options onto the table, and which trades are going to have more power is going to change with the political winds. So we'll just go with it, because easy enough to see it. I mean, the readings were spot on. You just have to look at the paint bar. You can tell that we just followed exactly where the money went, and it was pretty clean. I just don't think you can find it any simpler than that. So we'll continue to play it as it is, because it's all good. As always, anything relevant, I'll put on the Skype chat. But when it's this easy, it's not a whole lot to say. Have a good one. Trade well.